too. So like my psychology throughout the week, this is like my first day back trading, like since like November. Like I stopped looking at the charts like after like the first week of December, because I had a lot of stuff going on, and the markets were really choppy in December. So I figured no point of trying to get into that mess. But basically, you can see I even have it still marked up because I didn't even trade this pair afterwards. Let's see, where did I find this divergence? Probably here on the 5. This is a divergence I saw during New York session. So that was a divergence. Price gave you a break of market structure. Right, took out this significant high right here and pulled back into the 61. And this is basically where I entered the market, and I wanted to get in with a 10 pip stop loss. So this was just me being, honestly, I shouldn't even have lost that trade. And the second one that I took, I should have been able to hold, but me being greedy from just getting back onto the charts, and that's all it was really. If you can see like how this played out afterwards, I probably wouldn't even have to have taken another trade for the rest of the week. So me being greedy, I put in like a 10 pip stop loss and I get stopped out. As soon as I get stopped out, I re-enter the trade with a bigger lot size, because then I was just going to put my stop loss right here. And if I just like, and then when it snapped back right back to like basically where I had entered this trade, I was back up the amount that I risked plus a little bit. So I'm like, all right, I'm just going to get out. I'm not in the right emotional mindset to continue to hold the trade and all that. But if I stuck to the strategy, stuck to the system, this is how different this could have been. So my entry would have been right around that 618. Well, let's just say my entry was the same because I was getting a little bit early, I guess, or probably it started to bounce off the 618, whatever. So let's say like my entry was exactly the same and I wasn't being greedy, I would have been able to make so much more money on this trade. It's not even funny. Wow, I didn't even look back on this the whole week after that, to be honest with you guys.
Can I ask a question when you get a second?
Yeah, sure. What's your question?
The question is on the divergence. Like, so are you using the lowest point? Because you see how like even at that last little portion, like that last like 2 candle, the down up before it like impulses, you wouldn't use that. You use the lowest point of that structure as your starting point. You know what I mean? Not like that. You see how you use...
So I usually use like the lowest point to like the next lowest point right around here.
Okay.
Or if it's in the area, like I'll still count it. Like you see how like a lot of these candles were just like kind of in the same zone, and like
Right.
it's still pretty much the same thing. It's still underneath. So I just draw it out like in the area, like real quick. It doesn't have to be exact when it's that, like when you have it and it's obvious and you already have the breaker market structure, like you're gonna see it's gonna work.
And now you draw it off the body, but would you consider using the wicks for a stop just to be safe, or just you trust the body?
Yeah, I usually trust the body. I usually trust the body, especially if it's in New York on a pair that moves in New York. So like CAD Swissy, like the majority of that move is going to be in New York. So like in this scenario, and it was like over a 10 pip stop. So usually when it's like that, it honestly really depends for the most part. But like you see how the wicks are like negligible at this point. Like if I put it at the body right here and I put it at the wick right there, like it's going to be like less than a pip. So I'll just save myself the pip, to be honest, because if it gets that low, I'm gonna get stopped out. It's not gonna.
Understood.
It's
Right.
not gonna.
Stop on
It's
a
not
dime.
gonna hold.
Okay. Thank you.
Yeah. So this is where I should have put the stop. Like it. I mean that extra pip would have saved me here. Definitely if I just put it an extra pip and wasn't stubborn about it. This trade would have went completely different for me. As you can see, like, dude, the trend on this thing. And it never would have came back and hit me break even. That would have smashed all TPs by Wednesday, Monday, Tuesday, Wednesday. Yeah, Wednesday Asian session, or basically Tuesday Asian session technically. Right, or Wednesday. Whatever. I think it's like Tuesday night, 11th at 12. Yeah, that should be Tuesday night. I think.
Yeah, the 10th was Monday.
The 10th was Monday.
Yeah.
Yeah. So this is. Oh yeah. So this is Tuesday. So this is still technically Tuesday, like Wednesday's Asian session, like off the chart, but it's still yeah. So this was technically still Tuesday, like going into going like Wednesday starts after the Asian session. So yeah. So like basically like within less than like 24 hours, like a little more than 24 hours probably. Yeah. Yeah, like 30 hours, I would have caught like this whole move. And it was hit all my take profits. And that would have been a great trade. And all I had to do was risk another pip and put my and drop my lot size a little bit, and I would have got 4R out of this trade. And that would, so that's the difference between me starting the week like flat and me starting the week up 4%. So like that's so crazy to look back at, and wow, I didn't even know, because I didn't even look back at this chart after I lost that trade setup there. But wow, like this just goes to show you, like, dude, look at all of this. Like, well, this is a 5 minute. Let's go to the 15 real quick. Yeah. So this is
Yeah, are you talking about violating lows as well?
not yet, but so look, dude, this is a trade I took on Monday. CAD Swissy. I got stopped out because I was being stubborn about where I put my stop here. Because I had already entered the trade and I was calculating it off of like a 10 pip stop loss. So I took that trade, took an L on it, and then I re-entered right afterwards because I'm like, that extra pip, would have saved me. I entered the trade back, and I closed out as soon as I recovered that loss. But if I were to have done that trade correctly, like where I was supposed to enter and where I was supposed to put my stop loss, I never would have got stopped out on that trade and would have done almost 4.5R in like 2 days. So that's what I was going over. What I was just about to go over is how the EMAs look. So this is something that I've started to notice is more prevalent in the daily bias formation, as you guys are going to start to learn more of the different ways that you can enter trades with this strategy. You'll start to see like the way the EMAs look is also going to help you in the daily bias. So how these EMAs are like straight up, like almost like a trend line. You see how clean it is, like a trend line pointing straight up. That's telling you that more than likely, like the market is going to continue to be in a strong bullish momentum. And you see how like we really don't start to get a turn until like we start hitting the high of the week. And that's what it was like starting to react off of. And then we started to come inside these EMAs, and then the market's starting to basically go sideways. So that's something that Andrew pointed out as well. It's like when we're trading inside, you mostly see consolidation, or and what I told Andrew last night was basically when we're trading inside, if the trend is strong enough, you're going to see a quick wick rejection out of it. And what I mean by that is basically it's basically going to tap the EMAs and then just continue to go in that way. So this is like an example of that. Like when the trend was very strong with gold, right? The like price traded down, but it didn't stay there. Like it shouldn't stay there if the trend is going to continue to be strong to the upside. So as soon as it touched the 481 EMA, it just flipped. It completely flipped the script and went right back out. So it continued to go higher. So that's what you'll usually see when price is trading inside of the EMAs and we're going with the trend. But let's go back to CAD Swissy here. So that was the first trade of the week that I took, CAD Swissy. And that's how difference, like this is like you starting out with the system and not really trusting it and trying to do your own thing versus listening to the system and letting the trade go the way it's supposed to go. Like I wasn't even supposed to move it to break even until it came up to here, right? Until it came up to like the 0 level. But emotions, fear, greed, you put it all together, and instead of me making over $8,000 on this trade, I made a couple $100 in profit after the loss. So that blows, but that was my first trade for the week. And like I said, complete transparency over here. You can see I took the L's and then the one that, and this was me closing out the rest of that position. And then I took GA. This was like in the middle of the night on GA. I think maybe like Asian going into London or something like that. I took this trade, GBPAUD, on the 10th around 1900. So let's go back here. And these are pairs that I normally don't trade, to be honest with you. I usually don't trade these pairs, and that's why like I didn't have the correct understanding to be trading them the way I should have been trading them. So that's another thing we spoke about. Like you guys should probably like pick like a basket of 5 to 10 pairs that you're the most comfortable with, you understand the most. And that should be enough. Like you really won't have to go further than that at all. Because you will you just have you'll see the setup start to form. Like this was still like a consolidation type week. It didn't really move as much as it should have. But you'll start to see it. So GBPAUD took a buy. Did it tell me the price on here? No. Okay, let me find the price on my phone. Month GBPAUD 1.89061. Is that the same one? No, it's not the same one. Or is it? $1.89218. Okay. That was on this day somewhere in here. I don't have it marked up. I probably deleted it, but we'll find it. 1.89218 was my entry. Was I not going long? I'm doing 9, 2, 8. Stop loss was 89600. That doesn't make any sense. What the hell did I do? Oh no, that's my TP with 1.89600. That makes more sense. 89600. And then my stop loss was 89123. Yeah, what was I doing here? 89218. Oh, yeah. I remember this trade now. Yeah, this was later in the day. Yeah, I remember this trade now. I remember. We took this trade right here. I took this trade right in here. And why we did that, me and Brian actually took this trade together. We saw, so this is what we saw. Right here. We had this this divergence here initially. Right, we had this pop and then price came back down.
Yeah, that was a nice one.
Yeah. Well, we had that break of market structure, but then there was like no like entry because the time, like by the time it would have came down to the entry here. What were we looking at? Why
Was that a
did we-
15-minute divergence?
Hold on, let me figure this out real quick. Why was I looking at this? I should probably start writing these things down.
No, I thought we were looking at
I
this
think
one
we're looking
right
at this.
No, right here. Look, right here.
From
This
here to
was
here.
this was our entry.
No, we didn't get in here, dude. We didn't get
Why
in
was
there. This
that
is
a
where we
trade that I
got it.
remember?
That, I mean,
Because
you
a
could-
5-minute break of structure. Come back, that's 618, and then up. But you're saying it wasn't? I thought it was.
No, yeah. So this was like one of those ones that was close. Like it never
Gotcha.
really broke above here. But then we were looking at like the bigger picture. And then we saw this the divergence like this basically on the 15. We're like, okay, that didn't like play out, but like we had the divergence going here. And then this move we were considering to be like the break of structure. And then we like fibbed this move. And that hit like our 618. So that's why we're trying to enter in here. This was probably a dumb trade. It honestly was. Like it like didn't completely line up with the strategy. We kind of worked our way around it. And then there was like a 1 minute break of that. Yeah, we were just too antsy to trade, man. That's a dumb mistake. But I still ended up making money off of that move. Because the validity and the structure was still there. So I was able to catch like a little piece of this when it moved up. I moved stops to break even, and then it took me out. So that was that trade. It's probably not a good example to even go over. NZD JPY really kicked our ass, dude. Me and Andrew got burnt on this
So
thing.
upset.
And then it kind of did its thing afterwards. So NZD JPY, man. So where was that? We were trading that on what day, Andrew?
Tuesday night.
JPY? Tuesday
Or
in the Asian
excuse
session?
me. No, it was Monday night. I'm sorry.
Monday
Monday
Asian
night
session
in
right here?
Well, technically, yeah. Well, technically, it's like going. It
Oh,
would still
right
be
here.
Monday
Yeah,
night
yeah.
into
So this
Tuesday.
one. Yeah. So we took this trade. It came back, hit the 618 right here. Was it right here that we hit the 61? Let me see. Where did we find the divergence, first of all? Yeah. So we had divergence right there. Break of structure. Price pulled up to 61. It gave us a little bit of profit, but we didn't take nothing off. And then it came and took us out with that wick. And I'm like, it feels like it's just not respecting. And it should keep going down because our 15-minute time frame, if you look at it, so this is like another one of those scenarios with this. I didn't take this into consideration there. You see, so this is another thing with bias. So write this down. Like when your arrows, like when your EMAs are like going in different directions and they're like this, like basically when they're diverging, like if for a lack of a better term, when they're diverging, like one EMA is kind of going flat, one EMA is going forward, like there's going to be different variations of it, and I'll try to draw all this out and create like a nice little graphic that you guys could have. But like if it's like diverging, price can honestly go either way. So when price is like converging or diverging, in like and kind of creating like a triangle or whatever with the EMAs, price can break out either way. So in this case, like it wasn't
I think
it
you're a
wasn't
day
crossed
ahead.
up out of that. What?
I think you're a day ahead.
I'm a day ahead.
Yeah, I had my entry was at 7,800. I think
Oh,
you're
so this
one
is
day
where we're
ahead.
looking at?
Yeah, that's where we were.
Oh yeah, that does look more right. Okay, so let's kind of reevaluate that. Scratch everything I just told you. Except for like what I told you with the bias and stuff, obviously. But let's see here. Where did we find the divergence then? I think you put this in the Telegram. Let me
did.
see here. 10th. Whoa, went way too far back. 8th, 9th. $40. 10th right here. Okay. Great art R. Here it is. Oh no, the USD CHF. This is when we were in the GA
That was
trade.
my G. That was my GJ
And then
trade.
here's your GJ trade. And then NJ is that night, that same night for
Exactly.
sure.
Yeah.
GU. NZDJPY. All right. So this is what it looked like, guys. And then what were we waiting for? I wonder if NJ sets up, and then it did. Okay, so it broke this structure underneath here. So let's just grab the timing right here. So right around 78, 2100. Okay, pop back up here.
And then one Asian session back, yeah.
So right here, this is basically what we were getting into here or here. We got in here or did we get in here? No, this was the break of
My
structure
first,
move. Yes.
yeah, my first entry was 7,800, and then my
This
second
is how we
entry
marked
was
it up. So
7,808.
price, you can see how price was creating a lower high. I mean, the indicator was making a lower high and price made a higher high. So this was divergence that Andrew was looking at. And I was like, yeah, that seems pretty valid. And then price broke structure underneath here with this move. And then we entered right as it got to the 618. I even entered a little bit before. I'm like, this might go before we even get there. Well, obviously it didn't. It it hit us out. And then I tried to re-enter probably like right here, and I put my stop loss above the wick. I'm like, this could be one of those scenarios where in Asian session, sometimes JPY pairs, they try to fill in portion of this wick, but they won't break the wick and then go lower. But that's not what happened. So I took an L here as well. So I took like the 1%, and then I took another 1% off of the same setup, which was in Asian session. Probably if you guys ever trade Asian session, don't risk 1%. Do like 0.5% risk, because the fact that it's Asian session already kind of puts down the validity of the setup. And looking back at this right now, looking at the 15, I probably like it's probably not an avoidable loss. They just ran the stops twice. There was no way that we really could have avoided this. Like trading this inside of Asian session. Because like our EMAs were still like, you see how they're nice and open. And you still have like nice reactions that went downwards. It just when this move happened with London, it broke the structure on the 15, and that's why price ended up pulling back and then shooting back up to create like a higher high. And this was just the start of the week. This was Tuesday or Monday.
It was technically going into Tuesday. It was the Asian session that would lead into
so it was
Tuesday,
going into
London.
Tuesday. Yeah, so it was technically like the week had really just started. Like this is all if we were looking at what we had to work with for the week, this is what me and Andrew were working with. So from like, if you're looking at just like this, like, yeah, it kind of makes sense. Like it'll push back here.
Thought it filled in.
Yeah, it filled in, and then it should just kind of fall back off. But it looked like it wanted to. So what it ended up doing was going higher, running even like the stops above here, and then finally creating divergence up here, and then dropping the way it was supposed to go. So like this crossover here, like you see how it was diverging, like our EMAs are diverging in here. Remove all drawings. Our EMAs are diverging in here the next day, and price used that as support to rally up. But what would have started to give us a telltale sign that it's probably a fake rally is price didn't cross over until like the next day. And even when it started to cross over, like we didn't have any, like a big retracement like that should have snapped into a higher high, but it didn't create a higher high. It failed. That swing failed from a structure perspective, and we had this divergence going for us. So once we had all of that, this was actually one reversal setup that we could have taken this week. So I'll go over that once we teach reversals. But if we were to basically come back, so this is where like sticking to one pair, even if you're losing trades on it, can help you. Like me and Andrew, if we stuck back to NZD JPY after we took these L's right here, right, and we were still watching this, right? What came, what day was this now? Thursday. When it came Thursday and price broke this structure and London's broke this whole London session structure and pulled back, and we had this nice divergence going on right here. From a reversal standpoint, we could have taken this trade, and all those trades that we lost here. So we lost 2% on this total, right? We took 1% L first from taking the stop loss from the body. Then we took another 1% L from the for taking it from the wick, and then it taking us out. But then this one trade right here lined up perfectly, right? And taking that from the 61.8 with the correct stop loss placement of 11 pips in the same day could have already given us everything we lost and then some.
It's just a funny trade, man. It's
What's
just funny.
this one or this one
Yeah,
back here?
Just back like just how it worked. Like it made that strong bottom on
Yeah.
Monday, and then it took 2 days to run back the highs, and then it came back and ran the lows. It was just
Yeah.
Yo, my NZD CAD was also really nice.
Yeah.
Remember that trade, Arjun?
Yeah, that ended up dropping. That's actually Austin took a short on that.
Yeah, mine was like somewhere towards the beginning of the
It
week
was the
when
same
it
day,
dropped.
like you shorted it right here, somewhere in
Yeah.
here. And then
Yeah,
it
somewhere
came and
there.
hit you out break even, and then it dropped.
Mhm.
Yeah.
That was a nice trade.
So just so much opportunity, man. It's crazy. Like, even with a couple L's, as long as you can hold your mental state in a good spot, even after a couple L's, and drop your risk a little bit, like this strategy will pay right back out. Like, if you just held this one trade right here, you could have passed a challenge. There's one trade right here could have passed a challenge for y'all. And that's like what I'm trying to get you all towards, like this, and that's something I have to work on myself, is like holding trades. I'm more of an intraday trader. I like to be in my trade in the same day and out of my trade the same day. But when prices consistently creating lower lows and there's no type of divergence or anything, and the overall trend is starting to shift back the way it's supposed to be, right? There was no reason to ever get out of this trade. Like if it was managed properly, right? As soon as it hit this low, you would have taken off a piece. As it started to come down towards like the 618 area, I probably would have taken out 70 to 80%. So even then, all of that would have recouped my 2 losses over here. And then if I just put my stop loss to break even or a little bit below break even, and then held out this trade until the end of the week, until it hit like last week's low, that would have been just my runner would have been like almost the same amount of profit as the ones that I closed. So that's just it's insane. Like that's the power of like trading with the trend and catching these moves like as they're starting to set up and happen. And I'm gonna equip you guys this week to be able to catch these setups right here by teaching you guys the reversal strategy. So that was that one. Besides that, I don't there's a couple trades that I took that are off strategy that I can't really explain how I took. But it was nothing to write home about. And then basically the other trades that I took were EJ and GJ, which I basically walked you guys through in the group in the Telegram. So you guys could have made some profit on those if you took them. And I'll just pop back right in the Telegram to show you what I took. So this is the after. This is the after that, what happened with those trades. And I took them right here. So this was me waiting for the entry. This entry actually didn't end up happening. It didn't end up coming to the 618 till later. Like it broke higher and then it fell back down. And then I took that secondary swing up. I'll explain that. But this one was pretty simple. So this one was taking New York's low going into the next day's low, and that's what showed us our divergence on the 15-minute time frame. Broke market structure, right? Pulled back to the 61.8, and I was looking to take this to the -1, and I believe it ended up failing right around the -618. And that's where I wake up in the middle of London to kind of check my trades real quick when I go to the bathroom or something. And then I closed it out at that time. I put my stop loss to break even and saw I was kind of rejecting this level. I'm like, I'm happy with this. I'm going to close this out. So I took it out right there. And then EJ dropped the whole week after that. So that's what I took. Yeah. And I'll stop sharing my screen. I've been talking.
Yo, is everyone set up so that everybody can start participating this week?
Yeah,
that
so
we
let
can
me
go
let me
ahead
do
and,
that as well. Actually, let me publish this real quick. So I already
yeah,
published. Which one did I give you already, Brian? The EMA indicator, right?
I think so. I don't really look at it since I had, you know what I mean?
Mm-hmm. Hold on one second. Let me pull this up. Scripts. Yeah, the EMA one is already published. So click this. Copy. I'm gonna drop it in the Telegram right now. So basically what you guys do with that link is you just click it and it will show up as especially for those that don't have the paid trading view. When you click that link that I just dropped in the Telegram, like a page like this will appear, and all you want to do is add to your favorite indicators. So this indicator, it has like the ADR built into it, and it has the two EMAs built into it. So like you don't have to have multiple indicators for the EMA and the ADR. I'll go more into ADR later, and how that can be helpful if you guys have never used it, but you can just turn it on and off from right here. So if if it's too much on your chart, which usually it is for the most part on mine, I just turn it off and turn it back on when I feel like it. So I just go in here and turn this on and off. So that's that. So that's the ADR indicator. I'll drop the kill zone and the TDI after I publish it after this call, and everybody can just start using those. And it'll all be set up with all the right colors and everything for everybody. And if you guys want to change the colors, obviously that's up to you, but it's just kind of the color scheme that I like. So I've been running with this. Oh wow, I've been talking for a while. That was probably a lot to take in, just like even just going over like my trades that I took this week. You guys can kind of unmute yourself and kind of talk about how was your guys' psychology this week? Like I know Andrew told me, he was on a trip and stuff, so that kind of affected his psychology, which psychology plays a major part in your trading. Like it honestly is like 90% of your psychology, because the way you think, like the way you're thinking, and when it's influenced by outside factors that are not just clear cut, what you're looking at and what's in front of you, when there's other things going on in your head, you start to make decisions in a different way. And really what we're doing as traders is just making decisions all day. Are we going to buy or sell? Are we buyers or sellers? Where are we going to buy or sell? Right? So there's a lot of decision making that goes into trading, and to have the best decision making process, you need to have the most clear head. So I would recommend that you guys only trade on days that you have a clear head, and then only trade in times when your head is the clearest. So what I find is usually, for the most part, it's either Asian going into London that I have the most clear head, or it's during New York session. So those are like the two times of the day that I find myself to be the clear head. So I usually only try to do that probably Monday through Thursday. Friday, I usually take the day off from the charts, just because things aren't set up in a way where I'll probably be able to trade on Fridays, which sucks because I probably could have caught a couple good ones today. And I didn't do the thing that I normally do, which you guys could see in the Telegram, because I didn't have that time to look at the charts even today. To be able to do the thing that I normally do, which is put out what were some of the setups that happened today. So if you guys notice that, that's because really pressed for time in Friday mornings. So that's that. Any input from anybody else? Are we alive on this call?
Yeah, bro, I'm feeling good. I was just, my input for everyone is just, try to contribute this week. Like, set a goal that, you don't have to contribute every day, but set a goal that you're going to drop, 5 charts, right? Start something small. That way you could get into the behavior of, looking at the charts. You don't have to be on there all day, every day, but start just putting yourself into the behavior of it. Because as we do this organically, a lot of us are going to be putting in some nice charts that we could all possibly get in on. So it'd be nice.
That's good
I
input.
did work on my psychology a little bit the past couple of days. In my live account, I had some trades going, and normally I don't ever mess with changing my stop loss or take profit or anything. I just put it in and let it do whatever it's going to do. And if I feel like maybe it's not going to, I just close it early, or if I get tired of holding it or whatever. But this week, yesterday and today, I actually checked on them, and when they were doing well, I moved my stop loss into profit more and more, and just kept securing it instead of taking anything off because it's a small account, so there wasn't much to take off. I just kept moving the stop loss into the profit more and more, and then 3 of them ended up going to take profit on their own. And then I had like 4 that ended up stopping me out in the profit. And then I just waited and re-entered them whenever I saw it was changing again. And then 2 of them today at like 4:30, I went ahead and closed out in profit. And then I'll just look at them again, on Sunday and see if they're worth. That way I didn't have to worry about the spread on Sunday and everything. So that was like a big thing for me because I don't ever really do that. And it was kind of nice because I felt like I was actively participating in my actual trades. If that makes sense. So
Yeah.
it was good.
Awesome.
Yeah, I think that for me, for this upcoming week moving forward, I think that I'll be home. I'm not going to be anywhere. I have a video shoot Tuesday, but other than that, I'll be on the charts. And I think what I'll do is, I'll put more of my trades in there, and I'll be more diligent at making sure that I'm not taking anything that's haphazard. I'll make sure that I take, trades to this methodology and put them in the Telegram so that people can see what I'm looking at. Because I have a very good, handle on this. And I think that if I stick to the idea that I'm going to put this in the group chat, it's going to keep me more disciplined to only take something that's really good. So that'll be more beneficial for myself and also for those in the chat that look at, my markups.
Yeah. Cool, man. That's really cool. And that's kind of like the kind of the idea behind this thing is to just kind of like have everybody grow as a unit. Like we're just like a week into this, and a lot of you guys are starting to pick up already how the trades are moving. You're asking me more high quality questions about like, what if so and so, if it's like this, what about this, and that tells me that, you guys are putting in the work, and, you're actually, on these charts and trying to find actual valid setups, and you're trading it, whether it's demo or whether it's, on a funded account. I would, especially for the people who've been out of it, obviously, demo more, but, it doesn't matter. Like it's a skill set. Once you guys got it, you got it, and it's not like these indicators, like these are like normal indicators, like they're never going to go away or anything like that. So like once you guys have it, you're gonna have it forever, so that's dope, man. That's really, really dope. So
I feel like this
yeah.
strategy is helping me to understand that looking at a whole move is so much better overall, period. For number 1, for your psychology, number 2, for your time and effort put in, and number 3, just for your sheer profit. Because I think being that I was such a scalper mind frame before, and for this whole time that I've been trading anything and learning and all of that, I think it was more fear-based. Like, let me just grab it a little bit because it might reverse on me and then I won't get anything.
Yeah.
And instead of, let me actually analyze this, let me really see what's going on, and let me just take advantage of the play. So it's been really helpful to kind of flip that switch.
There you go. Awesome. All right. All right. So yeah, let's get into what I wanted to teach you guys basically for this call, which is the reversal portion of the strategy. So on a reversal day, so I would write this down. On a reversal day, what we're looking for is to trade in the opposite direction. Most of the time, we're looking to trade in the opposite direction of the trend. So that's like counter trend trade. But there are certain parameters that will increase the probability of that counter trend trade. And what those certain parameters are number one, if we're looking for a sell day, right? If we're looking for a sell day, we're looking for divergence near the high of the day, right? So you guys understand that these session separators are where the day starts, where the day ends, right? And the highest point inside of these session separators is where you have the high of the day. So the high of the day on this trade on NZD-JPY was formed at like 5:15. So basically like the ending portion of the London kill zone, right? So that was the absolute high of the day until that point, right? And when you compare that high of the day to any other significant highs, whether that's the Asian session high or the previous day high or the previous 2-day high, when you compare that point to the actual high of the day, you should see divergence. So that was step one, right? Step one was really like, we're looking for it to be near the high of the day. And then step two is finding the divergence with that from another significant point. So this was like the closest significant point from where we have divergence, right? So this is the divergence that we saw, right? So once you see that divergence, that's telling you that, hey, even though the EMAs are crossed up and pointing up, right? Even though they're crossed up and pointing up, we could see a potential reversal. Does anyone want to take a guess after divergence? What's the next thing we're going to look for? Bryant, you can't answer. Andrew, you can't answer because I know you guys know the answer.
Fair enough.
It would be breaking market structure like normal, right?
Exactly. So after the divergence, we're looking for the break in market structure. So when this trade made a swing down, right? It made the swing down. It broke market structure as soon as it came below this point right here. Why this point? Why not that point? Because this was like the point that started this huge run up. So I would prefer to use this point as the break of market structure, or the other one that you could use is this low right here, because that's like the low of the London kill zone. So when this one or that one, either one would have been considered the break of market structure. Let me see if it actually broke beneath here. No, it didn't. So it came close, but it didn't. So this low right here is also very significant because it's the low of the kill zone, right? And it's inside of this huge run up. And if we take it down to the 5-minute, you're going to see that it's like a very significant low point. You see how price kind of created like a support here and it rallied away from that. So when price broke through all that, right, and it's like almost like an equal low right here from that point. So yeah, right around same thing. Just close enough to that point. It's like another thing where it's like one kind of those that's like kind of close enough to market, like break a market structure. If you were taking it off the 15, but I would have considered it as a break of market structure because it ran this low very aggressively, and we had this divergence to back it up. So once all that was set up, then it's pretty simple. We're going to take our fib from the highest body in here to the low. And most of the time I'm just entering off the 618, but if you guys have the patience, right, you could have, got a better risk to reward by taking the sell at 786. But we'll just measure at the 618 to make things simple. About 11.3 pip stop loss. You caught a little bit of drawdown, probably for like 30, 45 minutes. And then it came into profit, and the rest is history. You guys can see what happened after that. Just an aggressive move to the downside for the rest of the week. And that trade was on a Thursday. So I probably would have held like I said, you know, if I was managing it correctly, I probably would have held until like Friday's close, which would have been like up here. Or I would have gotten out at this significant low point. That's last week's low. And that point, it's like, okay, you know, and look at that. You see this? That's a significant low because it's last week's low. And on the 15-minute time frame, you start to see some divergence happening as we reach there. So that's like it's a big giving point that, you know, the price might want to pop off of there, and that's exactly what it did. It started to pop away from that. So if you close right there, you know, a nice 1 to 10 risk to reward. Does everybody see what I did there?
Yeah, and that was Monday's low. That was
Is
the
that
low of
Monday's
the
low?
week. Mm,
Oh, that's was this week's low. Yeah.
Yeah.
Not last week's low. Yeah. So that was this week's low. Good point. I usually kind of have a better grasp of things. I just I don't know why I've kind of been having my days off a little bit because I guess it's because I've been I took a huge break from the markets.
Yeah. And
Yeah.
I mean, not to throw like a wrinkle in this, but when you're getting reversals, the one thing about the TDI, I've worked with the TDI for like 4 years now. You will see RSI in lower price values under that like 50, which is considered a stationary 50. As price starts to hold under there and create like a lower RSI value, that can give you more confirmation or confidence that you are going to continue to keep moving in that selling bias as well. Because you can see as you transfer zones from above
You're
that
talking about this
stationary
black
50,
line, right?
I'm talking about the blue, like the RSI.
Oh, the blue is the RSI.
Yeah, so as that RSI starts breaking, and you see when it pulls back up to hit our fib, and it can't really manage to get through that black, which is technically a liquid 50 as it's called.
Yeah.
It's not getting through there, which kind of can give you momentum confirmation. It's failing, and it's also failing to remain above that stationary 50. That's giving you confirmation that it's weak and that you could continue to see that sell bias, just to kind of add a little notes on the TDI. From a previous group that I worked with, this whole divergence type of strategy was something that I don't want to say I came up with, but I'm pretty good with divergences and stuff like that. So if anybody has TDI questions or divergences questions, definitely you can lean on me, and I will give you my best insight.
Yeah. I'm pretty new to using like TDI and stuff like that. I've done divergence and stuff before. But then you already know, like I've told you guys last night as well, like, you know, you guys get to the point where I'm at, like, you know, once I've learned this thing, like this is how my chart normally looks. There's no indicators going on at all. Basically, I'll just have like these kill zones on to mark like to help me quickly identify certain significant points in the market. And then that's basically how I drove this strategy. But then I started to notice, you know, once I started talking to Nez, and I started talking to another one of my friends, Austin, who does work with the TDI, and they do use a lot of indicators. I started to notice that the TDI, gave you a good indication of when these market reversals will happen. And combining that with a break of market structure, you usually have a pretty good hit rate. And even the trades that you lose, they're going to be small losses, but your winners, like they look like this.
Absolutely.
So,
especially when there's significant highs on not only price, but the TDI. If you start getting into minutia of those like middle divergences, sometimes you can get jammed because you're in the middle of the range.
Yeah, absolutely. So that's why so coming back into like the reversal, the steps for the reversal strategy, it's very, very important that it's running out a significant high, either an intraday high or like intra-week high, like whether that's like a Monday's high or Tuesday's high or last week's high. It's very important that's running out one of those significant highs, or especially for the sell, like talking about the sell, and it has to be coming from like the high of the day before you get like this break of market structure. So that way, it's that's what makes the trade very high probability. And the divergence, is kind of helping you identify that it could be one of those days. And then basically on those days, we're basically foregoing the daily bias coming from the EMAs because the move already happened. You get what I'm saying? Like, the bias was correct. You see how a significant portion of the day we did move up, right? Now that move is already happened, right? It's not like the daily bias was wrong. Like, you can see, like, it went from the open of the day, like, it moved more up than it moved down, like 25 down and like 30 up. So majority of the move was to the upside, but the move that we could capture that was better was in the sell side for us. So don't completely don't think that, like, especially when you're trying to just trade normally, don't think that these EMAs are not important. They are like they will save you in a lot of situations. When once we start to see a better trending market, you guys will see that's like, oh wow, that was a fake break of structure, or like, that break of structure didn't have divergence with it, or that divergence was less probable because the EMAs were pointing straight up. This was a very solid uptrend, and you guys will start to see those days. It's just more visualizing the strategy that you guys will get into that, if that makes sense.
And I think when you start getting those crisscrosses of the EMAs, they're not completely set. When you have a strong trend, as you noted before, they start to separate from each other. When you start getting them to crisscross like that, you
Yeah.
can get consolidation, you can get reversals. So if you're, if you're looking for that good trending move, just make sure that those EMAs are like more separated from each other and going
Yeah.
in agreement.
Yeah, absolutely. That's very, very important to the whole piece of the puzzle. I didn't do anything without a purpose. There's a reason. I came up with, like, 481 is not like that's the second moving averages number, like the longer term one. That's not by accident. 481, like, it comes from like me calculating out from a specific time frame. I don't remember what it was because I did it so long ago when I came up with these EMAs. I was, this strategy's kind of been in the works for like 5 to 6 months, but like I put it all together like 2 weeks ago. Like, putting all the pieces of the puzzle together happened like 2 weeks ago, but it's been in the works. Like, it's been something I've been thinking about, something I've been working about for like 6 months. So once all the pieces of the puzzle came into play, I really don't remember why, like which time frame I did the calculation off of, but 481 was giving me a good understanding of the higher time frame bias, and giving me a good reaction off the 15. So the 481 and then the 201 is just like a simple, like, people use the 200. I just made it 201. Sometimes like that one extra candle can, getting rid of one extra candle can kind of help the whole situation. So that's why I did 201 and 481. Like, every single thing plays its piece. The EMAs play their piece in the bias, and they play their piece in telling you in what kind of day it'll be, right? Just by looking at them. And that's the power of the EMAs when you use them right. Like, they're a visual indication of how price is moving, just quicker to understand without getting into the nitty gritty of everything. And the TDI giving you potential points of reversal. And then break of market structure and fib is like something people teach just normally, so combined, like, you're having 4 to 5 confirmations for every single trade setup, and that's all you can ask for. 4 to 5 confirmations, like, you're golden, man. Like, even if you lose a couple trades in a row, I just showed you, we lost these 2 trades on NCD JPY right here, but knowing this reversal strategy, you could put this in and boom, you got 10 times that back in one trade. So just a nasty strategy when you put it all together. Hopes this doesn't seem totally irrelevant, but how do I set up those session boxes? Don't worry, Rob. So I'm gonna put the session boxes indicator the same way that I put it in the Telegram for the EMA indicator. I'm gonna put the session boxes in. I just have to publish it. So I'm gonna publish that after this call. And then you guys will have all of the indicators in the group. You'll have the links for all of them. And that's why I said you got to make sure you guys get Telegram on your computer. So that's an example of the sell. What's up?
Also, so I don't have Telegram on the computer yet. So what I did when you dropped the other one is I went and clicked it on my phone,
Mm-hmm.
and then it popped up and allowed me to sign in to my trading view from
Okay.
there. And then I saved it there. And then I went and looked and it was available. So
Okay,
that's a
cool.
workaround too if you don't have it on your
Yeah. If you guys don't know how to get bet, definitely will be dropping charts this week. Just got my Telegram downloaded on my desktop. Okay, cool. Awesome. So I'm gonna leave it up to you guys. Should I go over? I mean, the buy side is the same thing. It's just flipped over. But would you guys rather have me go over an example of that now, or would you want me to wait, give you guys a little bit of time to kind of absorb the information, and that's something we could go into next week's call? Because I know a lot of people are just getting back into trading, and it might be a lot of information to take in all at once. So it's up to you guys whether you want me to go over it now or next week on our next recap call next week.
good with it. I'm just taking notes so that I can go back and know what I'm looking at.
Okay.
So
Anybody else? Misty, Rob, Danny?
Yeah, I think you should stick to the basics till Misty, Rob, and Danny drop some charts.
Well,
And then next week we'll go into advanced. That's just my opinion. This is
yeah.
your
Well, I
group,
mein I'm
but
coming
yeah.
into the advanced. It's just gonna have to go this way because I want to at least keep adding and expanding on the understanding, even if it takes people a little bit longer. That's why everything's recorded. But I just want to kind of get a grasp for today. I know we've been on here for like an hour and change already.
yeah,
But,
I'll
I think-
definitely be watching the replay whenever I go back over my notes like I did before, because it helps
Gotcha.
a whole lot before you start practicing the difference to see it again and then go, you know what I mean? For me,
Yeah.
for my learning style.
Yeah, no, absolutely. Everybody should do that. I think Misty was about to say something and Rob were about to say something. So whoever wants to go first.
No, I just like I just wanted to know how the EMA worked, but I kind of do know how it works. But just like I said earlier, my issue was trying to keep up with the trend because that was my only issue for the week. So now that I could sort of use it, m- you know, I'll be able to like definitely participate. Due to my crazy schedule, like I said, like when we was talking about psychology earlier, that's why I focus on Sundays to just look at 5 to 10 different charts and
Mhm.
try to see um, what direction some of the market may be moving. And just like you also said earlier about reversals, I'm just usually I know there will be a point where a trend will stop and a reversal will begin, and that's another thing that I know that I struggle with. Is to know when the direction change.
Yeah, so like divergence and stuff is definitely going to help with that. So are you trading every day? Like, are you taking trades every day, or like?
I only trade Tuesday, Wednesday, Thursday. Monday and Friday I don't.
Girl, that's all you need. Tuesday, Wednesday, Thursday. That's the best days of the week to trade. You
Right.
trade London session, you trade New York, you trade Asian. What do you trade?
I trade New York.
Shit, that's more than enough. You don't need to trade more than Tuesday, Wednesday, Thursday London session. I mean,
Right.
New York session. Like this was a setup that happened on Thursday. One trade, and this one I'll be done for the month off of that one. No cap. What's good, Rob? You were about to say something though.
Yeah, so I was just gonna say, like, if you were to go over the buy side tonight, that's what I normally do anyway. I go back and go over the Zoom because it definitely helps to just kind of go over the information. Because like right now I'm cooking and like I got kids running around, but I definitely go back and just sit back and watch and kind of look at my charts while I watch the replay. So I mean, if you're trying to go over that tonight, that's cool with me, bro.
All right, cool. All right, as long as everybody's in agreement. Like I said, it's gonna be like the same thing, just flip flop. So USD CAD was the one that presented it today. So we had divergence from the day before. So this was yesterday's divergence. As you can see, these EMAs are wide open, but we're getting close to towards the end of the week. So when that happens, you know, there's usually some point, like if you look at a weekly candle, right? Just so you guys can get a perspective of what I'm trying to say here. If I'm looking at a weekly candle, right? There's the open, the close, and the wick, right? This wick that comes back, you know, towards the end of the week, you're going to have this high point and you have this wick that comes back. And sometimes that wick is pretty significant in price. Look how big the wick was to close this week out right here. Just that wick was 88 pips. So it's not a small move that's happening. Look, on like especially these days, 143 pip wick, 113.2 pip wick. Like that's a significant move. So even this week for the 99 pip wick. So there's a setup in there that we can catch at least 20, 30, 40, even 50 pips on. So that's the setup that was presented here on USD CAD. So what happened here? Divergence, right? Happened near the low of the day. This is the low of the week as well, right? That was the lowest point for this entire week. It was coming from there. So that's like step one, right? Step one is to find the low of the day or the significant low of the session. So these were both. So these were both significant point in sessions, as well as the low of the week and the low of the day. So that's what this was, right? And it gave you the divergence right away. You had a strong break of structure off the 15-minute time frame, right? And you can see how, you know, when we initially got this break of structure, it never really gave us a pullback. So this swing was still going. Excuse me. This swing was still going. So once it completed, right, and you took this fib from body to wick, right, price came into our 61 right during London session, right? So whether you got it in London or whether you got it in New York, like it was still around the same price point. So even if you were just waking up for New York, you still would have been able to capture this trade right around 6:30, or let's say you even waited till the 7 o'clock time. You know, even that gave you a little bit of a worse entry. It's still a valid setup. Like it's just what's the difference here? 69 versus 79. So like a 10 pip difference. But let's just say you got in for the London session, or when you saw this and price was already breaking down before you fell asleep, you could have put in a buy limit at the 61. Just saying, just a couple ideas throwing them out there. So you get in around the 61, you throw your stop loss at the 1, about a 26 pip stop loss. Most likely it's going to break the high of the day because you have this nice strong move. So, I don't know if you guys know this, but sometimes you're usually looking for a measured move. And that measured move puts you right around the negative 27. That's kind of where I've been looking for price to head towards. And that gave you a 2.34 R on that trade setup. If you took it to the last take profit point, right, you got over your 3R. And that's kind of like, that should be like the standard that we're looking for. Like 2.5 R or better is like what a trade should be going for. If it's not going at least 2.5 R, I don't want it. Because there's just not enough profit potential to come out of that trade. So this one right here, went over 3R in the same day. Honestly, almost pretty much within the same session. It was able to give you, that's like almost a swing trade, 84 pips. And that's the buy side. Pretty simple, right? Andrew, you got any input on this one?
I think that a lot of times this happens when you get a significant move like that, because the trend is so a significant, like in this case, down move for the whole week. I mean, you've had a short run all week, so a lot of times it's not going to take off in one session. Price is going to want to come back and almost test the breakout level
Yeah.
if you will, because people can say market makers, people can say whatever they want, but it's simply just the way that price moves. When price breaks a zone, it retests the area from which that price broke out to, again, see if there's sellers to continue the downtrend, because overall this is downtrending. And if indeed there are buyers at that level, that's where you see the kick at the 618 or more closer. It dropped a little bit down, but obviously the 618 is valid. So I guess a great piece of advice that I give myself is the market takes time. We feel rushed sometimes. Like, speaking for myself, not trying to say this for anyone else, but speaking for myself, I often feel like the market moves so much. So it's like, oh, it's got to be now. It's got to be now. It's got to be now. But sometimes these trades can take a day, 2 or 3 days to play out. So you might be hammering or trying to get at something, and then you might be like, oh, well, it's not going to work out. And then you come back 2 days later and look at the chart and be like, oh, I was right. I was correct. So if you
Yeah.
just allow the market to play out, trust the levels, trust this this strategy, which is really done wonders for slowing me down, it's going to work out. Just give the market time to do its thing. And that clearly worked out really well.
Yeah, absolutely. Like, yeah, I mean, I didn't even think about it that way, but like, honestly, like, what I was thinking while you were talking, like, you have this huge move down on USD CAD. Like, there's no type of pullbacks really. Like, you have all these like teeny tiny pullbacks, and like nothing really gave you like a good opportunity this week on the strategy. But when it did, like, basically you would have been paid to wait, and that's that's the marketing term, like everybody says, but it is true in this scenario. You've been paid to wait for your strategy to line up. So for 3 days you got nothing, and then not even, yeah, like basically more than that, like freaking since the opening of the week, like you didn't get nothing.
Yeah, it took off Monday.
And then it finally took on Friday. You get a nice trade that pays you for the whole week. Like, you don't really have to take another trade. You didn't have to even be trading another pair. You could have just been waiting for some type of play to happen. And most weeks you're gonna, like, I honestly challenge you guys to go back as far as you can on TradingView on as many pairs as you can, and give yourself every week. You're gonna find one. I would think that you'd find with where everything lines up, whether it's a reversal or whether it's a trend trading trade, you're gonna find at least one a week. So if you're looking at 5 to 10 pairs, you're gonna find one almost every day. Maybe not every day, but almost every day. And one a week will have you pass the challenge. One setup done correctly, with that hits take profit in 4 trades, you guys would pass the challenge. Less than 4 trades, you would pass the challenge. And that's our goal here. And like I said when I was kind of introducing this group, and everybody that I told, like, I'm not here to make $5. I'm not here to make $10. I'm not here to play that game anymore. I'm 4 years deep into this thing. I'm not here to play for 10 pips here, 10 pips there, and only make $1, only make $2. That's not doing anything for me. I would make more money at that point just doing something else. So, and I don't have the patience anymore to try and sit there and grow an account from $50 and $100 and make $1 here and make $1 there and make $2 here, make $3 there. Like, it's not happening. I would rather invest my time, energy, and money into getting a funded account that you can trade and make a significant amount of money every single
Absolutely.
week.
I agree.
So that's the name of the game here, guys. Yeah.
I
Could I,
definitely see that.
Can I point something out that I kind of noticed, Arjun? If you slide back to Friday, Monday of this week on that, do you see that massive divergence from Friday to Monday?
This one right here.
To there. And if you fib that, I bet you
Probably
have
is.
something within there.
Yep. Yeah, it's there.
So you could have seen that huge drop that happened on Friday and
Yeah.
been short biased for the week and caught that fib in New York Monday, and you had that whole 3 days, 4 days of drop.
Yeah,
would've
you would
passed the
just had to
challenge.
have seen the
Oh,
divergence
could have passed 2
before.
challenges. Right. But I'm
Yeah,
saying,
so you would have to see
it's
this
just
divergence
interesting.
right here. And I was talking to Brian about it before the week started. So this was like the
Mhm.
divergence that you would have had to see. Because remember, we need the divergence first and then the breaker
Right.
market structure and pullback. So this
Oh,
is the
understood.
divergence you would have had to see. Well, but for those of us that have it more advanced, we would have understood how we would have taken that trade. And yeah, so this is the divergence you would have started to see, right? Prices making lower highs, and the indicator is making higher highs right here. So once that happened, we have this huge break of market structure, and price pulls back. That's it. You could have been in for one for the week. One for the week.
I mean, even 4R is great.
Yeah, 4R here, and then you catch another 3 here. That's challenge complete almost if you're doing 1% risk. Almost. That's like, you're just gonna have to wait for one more setup and you'll be all right.
It's funny how simple it is
Yeah.
in theory. Obviously
Yeah.
emotions and everything else comes into play, but when you see it like that,
That's the problem, man. That's the problem.
it's the problem is being a human being.
That's crazy.
Yeah, man. But I'm glad you're starting to see the bigger picture. Like as you guys start to see the bigger picture, you start to understand where I'm coming from. I know a lot of you guys came into this already thinking about the challenge, but for those of you that didn't know about the challenge and didn't know how how professional traders go about things, this is how they do it. They look for trades that give you high risk, high reward for the risk that you take, to make your trading life a lot easier. Because you could have taken this one trade for the week or this one trade for the week and take the rest of the week off. Do what you got to do. Because at the end of the day, we're trying to buy ourselves time. How we buy ourselves time is to make money in shorter periods of time. All right, so that's my spiel for today. We went on for like an hour and a half. Wow, it's gonna be a long recording probably, but it is what it is. Any questions, closing comments, concerns before we all
Question
head
on
off?
the challenge.
Yeah.
So once you make the actual percent profit total that they want,
Mm-hmm.
and you're like you didn't use the whole 10 or 20 days or whatever, does that complete the first phase and automatically start you on the
Yeah,
second
so they have a
phase?
minimum number of trading days. So let's say in 2 trades you got like 2 good trade setups and you hit the profit target for phase 1, then you would just have to open up like a small position for the rest of the minimum trading days.
Oh, okay.
So like a
Just to-
0.01. Yeah. So
Gotcha.
so just so that you can open up the positions on the certain days to add up for your trading days. And then you would start the next phase after that. And that
Gotcha.
goes for whether you do the FTMO or the MFF. It's the same thing.
Okay, that makes sense.
Yep. And then you would start the next phase and then you go through the same thing. It's just your profit target is lower. Your profit target is either 4% on MFF or 5% on FTMO. And then your minimum trading days, I think, are still the same. So you finish that out. And then after that, once you pass both of those phases, you would be a funded trader. And then at the end of the month, 1 month after you've were done trading for that month, if you were able to make a profit, they'll send you your cut minus their cut via like Bitcoin or wire transfer, however you want to do it.
Gotcha. Okay, cool.
Cool. Any other questions, comments, concerns? Is anybody excited for next week? Besides Wendy?
Terrible. You got to sit through the weekend.
Yeah. And we have a day cut off next week because Monday we can't trade. It's a bank holiday. So don't be trying to trade next week. On Monday. You will not catch me on these charts on Monday.
That was part of the reason why I closed those trades out today at 4:32, because I was like, I don't want to deal with that.
Mm-hmm. Bank
So I'll
holidays
just
are no
relook at
fun.
them later because they still had plenty left I just didn't want to get stuck.
Yeah. Brian, you were about to say something?
Yeah, I was just gonna say buy XLM and XRP.
XLM and XRP. Yeah. So guys, this is my crypto partner right here. If you got any questions about crypto, this dude researched so much crypto. I don't know if you want to disclose how much you got in crypto, but this dude is he's crushing it with crypto. He's just
I don't even
investing.
think I don't even think you can buy XRP anymore.
You
Uh,
can. So yeah. So as a group begins to grow, I told Arjun, because Arjun and I, if everybody like Rob knows, a lot of people know, like he's like my brother. We've been working together for a very long time. I'm gonna be dropping a lot of crypto sauce as the group gets more organic and the group earns it. I want the group to earn it because Arjun's already dropping sauce, and I want this to continue to grow for everyone's benefit. Like Arjun's not charging for it and I'm not going to charge for it, at least right now, right? So XRP, XLM are really great. They're stable coins. But if you look up Miss Dixon, MS dot Dixon, she was part of the Senate hearings with Coinbase, FTX, and she's very knowledgeable. She's the head of XLM. Stellar Lumens is almost going to be like the Cash App, PayPal, or kind of transitory payment system for individuals, where XRP will be more institutional. Now, I'm also looking at Alchemy Pay, ACH. Alchemy Pay, that one's going to be used for retail. So like you have your Target, you have Starbucks, you have all these big companies starting to take crypto. What Alchemy Pay is going to do is they're going to set up crypto payments where these big box, big retailers, big Fortune 500 companies are going to take the money in crypto, and then ACH is going to convert it right back into USD for the companies right away. And then ACH will accumulate all that crypto. ACH is going to be taking, if that really happens and we have massive adoption in cryptocurrency, ACH is going to be one of like those, big companies that, kind of segue payment systems in retail into crypto, and mass adoption will take place. I really like Matic as well. Polygon Matic is helping Ethereum scale. So I'm really into some of those stable projects. So Matic, ACH, XLM, XRP. You can buy XRP on Uphold. Please let me know if you want the link, the referral link. I might even drop it in the chat for Uphold. And then there's another one called OK Coin. Arjun will drop his link because this is his group and I want him to get something out of it. But OK Coin is one of the best brokers to also buy crypto with. They don't charge as many fees, and if you buy $100 in crypto, you get $50 worth of Bitcoin, and Arjun will get $50 of Bitcoin. I'm gonna put Uphold in the link. I will put that referral link in there because you can buy XRP with it. You cannot buy XRP with any other US broker, but Uphold actually allows you to buy it. And then they also allow you to buy SAND, SAND, if you don't want to buy it on Coinbase.
So Bryant is not a financial advisor. If you want to know what to do with your money, go talk to somebody that has all that legal shit. But we're just telling you what we're doing.
Yeah, let me go ahead and disclose. Yes, don't take that as financial advice. This is a recorded call. I'm already in these positions, and I'm gonna accumulate more over time. That's the way you should do it. Diversify. Don't put all your eggs in one basket. And like I said, and Arjun says, this is not financial advice. You take your own risk. You lose your money, don't come back to cry. You do your own research. I'm just in these projects and I'm going to be holding. That's really it. And then just make sure my philosophy, and then this is the last thing I'm going to drop. And if anyone has questions, let me know. My philosophy is to really diversify with cryptos. I have over 23 coins in crypto. So my eggs are not all in one basket. So if you have $1,000, why would you put that all in one basket? If you're really getting into crypto, you need to diversify that $1,000. Get in 100 here, 100 there, 50 there. take that as a philosophy, and then also the direction of the crypto market. The next big boom, like metaverse is booming, and it will continue to boom because these are big projects. But Web 3.0, look up Web 3.0, and then look up DAOs, and then we'll discuss those in the future.
Dope.
Yo, we about to start doing maybe we'll after like everybody's kind of learned like the strategy and stuff, maybe we'll just do like maybe we'll start like a podcast together, just talk about crypto and talk about shit like that.
Yeah, absolutely. And guys, and this is something that you don't have to trade, you can accumulate over time. And how great would it be if a year from now, all of us can say, oh, you know, my crypto portfolio is at 5K or at 10K. Doesn't have to be massive, but as you continue to invest and then, you know, more people join the group, you're gonna have your investment portfolio, whether it be stocks, whether it be crypto. You know, you have your investment portfolio, and then you're gonna have your flip portfolio, which is getting funded and living off that and using that to invest more. But you definitely have to diversify your investment approach. Like Forex is great. It's going to get us to the wealthy individuals we want to be, but we definitely have to diversify our funds. In my opinion, I read that in the Richest Man in Babylon. Very good book. If you guys want to take a read, Richest Man in Babylon. Great book.
Sheesh.
And that's really it.
There you go,
How do you
Andrew.
spell that? Oh, sorry. How
Yeah,
do you
yeah, go
spell
ahead.
that second one? You said Web 3.0 and then you said Dob.
So yeah. So you're gonna be looking at DAOs. And
Oh, DAOs, D-O-W.
no,
okay.
no,
No,
no.
no.
So crypto DAOs is decentralized autonomous organization. So it's DAO.
Oh.
And a lot of these DAOs are kind of like hedge funds. They invest into crypto. So yeah, definitely look into this. DAOs are basically the next Berkshire and Hathaway type thing. Like, you know, you could buy
Okay.
into Berkshire Hathaway. DAOs are gonna be that. Decentralized hedge funds. So it's pretty cool.
He's dropping shit I didn't even know.
That is really cool because that's hedge funds is something that I wanted to learn about and figure out how to be able to participate in. Of course, want to have enough money to actually participate in them because obviously you have to have a good chunk.
Andy, we're gonna have you open your own hedge fund.
What?
Yeah.
There's
So-
It's even better because I don't have to pay fees. I love
Yeah,
it.
so DAOs are really great. A lot of those will begin to pop up because they're part of DeFi, DeFi, DeFi.
Uh-huh.
Like Alchemy Pay, XLM, XRP are not. They're more stable coins, but they're part of almost like the DeFi ecosystem. But yeah, I mean, it goes into DeFi is one section, DAOs is one section, Metaverse is another, gaming is another. And you
Yeah.
got to see like where the trends are going. Polkadot, I really like Polkadot. If no one has Polkadot, then I consider adding it because what's going to happen is that there's a lot of
Yo, when you
cryptos
say
out there.
the polka dot or whatever, like drop the like the symbol. So it's like dot
Yeah, it's
USD, right?
DOT. Yeah, DOT USD. DOT USD. Dot is is gonna combine its cross layer compatibility. So cross layer and cross chain compatibility, where cryptos will be able to interact with each other. That's one thing that's very important in the crypto space. So Dot's gonna do that, and Polygon Matic is one of my favorite coins. I'm gonna keep accumulating that. And EOS, Arjun, there's actually like a restructure coming into EOS, so we're gonna be doing more research on that. But
Yeah, they're not gonna let that
EOS,
fail. So me personally, I'm
Yeah.
invested in EOS and Tron, and I'm buying about $100 worth of EOS every week.
yeah,
I wanted to
Justin,
get Tron a while ago, but I couldn't figure out how to buy it because none of my wallets
Kraken?
would let me.
Kraken is a broker, and then the
Kraken.
other
No.
broker on OKCoin.
yes, there you go. And Arjun will drop his link. So make
Yeah.
sure to go ahead and sign up for that OK coin, and buy $100 in crypto. That way you can get $50 in Bitcoin and Arjun can get $50 in Bitcoin. It's the most generous referral. And you guys could
Yeah.
refer your friends
Yeah.
to start using that instead of Coinbase. I mean, what a great way to get started in crypto.
yeah.
That's a fat referral.
Coinbase has so much fees and all that time that you have to wait to use your money, and
Well,
Crypto.com has high
the whole
fees
point,
too.
the whole point with like crypto money is like don't expect it to like grow and then you take it out. Like whatever you put in there, try to imagine like it's gone
Right.
forever.
It's gone. Yeah.
Yeah. And I'm invested in like, I'm pretty invested and in, I don't foresee myself taking on 5 years till 5 years from now. And I
Right.
consider all my money lost and gone. I don't account for it, and I'm not going to be sad
Right.
if it's lost.
That's how I've been too.
And I
with
have a lot.
what I've got. Yeah.
I have a lot.
Well, I don't have a lot,
I
but
have a lot.
like every time I found something that I wanted to buy, I'd throw $20 on it or $40 on it, whatever I had available that week.
Like let's just put it, I'm in the 5 figures with crypto. Not
awesome.
like 5 figures and yes, it's a lot of money, but I really want to just keep it and
Yeah, you want to reap the
accumulate it.
fruits of the labor later. Yeah. Awesome.
Yep.
Cool.
Definitely.
Okay. You said polka dot, and then you said the other one that was your favorite. I was still writing
I mean,
before I could.
yeah, polka
was a
dot is
weird
one of my
name.
favorite.
Polygon
Polygon-matic.
Yeah, that.
Polygon-matic.
Okay.
And then ACH, Alchemy Pay.
Yep, I got that one down. Okay.
Yeah, that one's good.
Oh, I had
That one
Stellar
actually,
already.
that one actually popped recently. Let me put it on the 1 hour. Like if you look at the chart, it actually popped and it doubled. So I doubled my income or doubled my position on it. And now I'm back to kind of pretty much my entry price. But it
Oh, cool.
pumped hard in the last like week. So that was pretty cool. So it'll keep going up. That's dope. All right. Well, fam, enjoy. Have a good week and weekend. I'm out.
Thanks,
Yeah,
y'all.
take it easy, man. I
All right.
just dropped my link in the trade the Telegram. The recording will be up probably sometime later tonight, if not tomorrow. Indicators will be up sometime tonight, if not tomorrow morning.
Okay.
And that'll be that.
See ya.
All right. Thanks again, Arjun. Thanks, Brian, everybody.
See you
No
guys.
worries.